Ooh, they added some oonks oonks music to the intro. I like it. Oonks oonks oonks. Taking Stock is 3, guys. I'm Kalilah Reynolds. Welcome to another edition of Taking Stock Live. We're bringing you all the latest business news and, of course, telling you how it will affect you and your money. Now, before we get started, remember to hit that like button, subscribe to the channel, and later on you can head over to the website where you can subscribe to the newsletter at KalilahReynolds.com/newsletter to get that information directly to your inbox twice a week. I see we have quite a few people on early. Let me know in the comments where you're joining us from tonight, what part of the country or what part of the world are you tuning in from. Now, here's a look at what's coming up on today's show, followed by what's hot in business. And say it with me, guys. Let's get this money.
The second largest cryptocurrency exchange in the world, FTX, has filed for bankruptcy, triggering a bloodbath in the crypto market. What does this mean for major cryptocurrencies such as Bitcoin? What will happen to all FTX customers? And should crypto now be regulated? We'll discuss with International Keynote Speaker on Bitcoin, blockchain and finance technology, Armando Pantoja, and the analysts weighing on NCB's Q4 results. And internationally, U.S. stocks rose significantly last week Friday after deceleration in CPI inflation data ignited the most intense rally on Wall Street since early 2020. But first, here's what's hot, brought to you by JMMB Group, your best interest at heart. Finance Minister Dr. Nigel Clark says that the impact of the Russia-Ukraine war is one of the main reasons the government is increasing the nation's budget by $60 billion. The minister said the war, which began in February, has sent food and fuel prices surging. The additional sum has pushed the total planned spending this year to $972 billion. The updated budget now includes the $2.2 billion spent between April and July for the electricity subsidy to households, the $600 million gas relief grant, and $200 million in loans to taxi and bus owners. It also includes $702 million to help students on welfare cope with transportation costs, as well as poor relief grants. The minister added that the raise in local and international interest rates, which were intended to help curb runaway inflation, has also increased interest expenses on the public debt. Jamaicans will soon be able to send and receive remittances through their Link digital wallets. NCB Financial Group announced last week that its subsidiary, TFOB, was approved by the Bank of Jamaica to operate a remittance service as a primary agent. TFOB is offering the remittance option through Link. This will make Link the country's first digital remittance primary agent. The feature is expected to launch in December, which tends to see heavy volumes of remittances into the country. Businesses can now apply for up to $7 million in grant funding through the Development Bank of Jamaica's Ignite Fund. The Innovation Grant for New Ideas to Entrepreneurship targets innovative small businesses that are looking to grow and scale. The program has 2 categories. The Idea Stage allows businesses to get up to $3 million. To be eligible in this stage, businesses should be less than 2 years old and do not need to have any revenue. The second stage, which is for early-stage businesses, allows businesses to receive up to $7 million. Eligible businesses are between 2 and 7 years old and earn less than 75 million Jamaican dollars annually. The DBJ said for this 4th cohort, it is placing strong emphasis on projects in climate change, gender, tourism, creatives, manufacturing, agriculture, technology, software, and ICT. Applications close December 15. Visit thinkbiggie.com/ignite to apply. FinSAC is reportedly processing another round of bids for its stake in Siboney Group. FinSAC, a government entity, owns 72% of the shell company. Siboney currently has no assets. The company previously held properties in the tourism sector and was formerly a major investor in Sandals Ocherius and Siboney Hotels. Early this year, an interested buyer withdrew its offer to purchase the company in the final stages of discussions. The cash-strapped company is now in danger of being delisted from the Jamaica Stock Exchange. Authorities in the Bahamas have launched an investigation into the collapse of the Nassau-based cryptocurrency company FTX to determine if any criminal misconduct occurred. FTX moved its headquarters from Hong Kong to the Bahamas last year. Then CEO Sam Bankman-Fried described the country as one of the few places to set up a comprehensive framework for crypto. Cryptocurrencies took a massive hit after FTX, the world's second-largest cryptocurrency exchange, filed for bankruptcy last week. Bahamian police said investigators from its Financial Crimes Investigation Branch are working closely with Bahamas Securities Commission to determine if any criminal misconduct occurred. FTX is also being investigated by the U.S. Justice Department. What's Hot was brought to you by JMMB Group, your best interest at heart. This segment of Taking Stock is brought to you by Bulwark Insurance Agency, insurance made easy.
Welcome back, guys. Shout out to all the early warmers today. I see, I love it when I tune in, when I log in to, this platform, and I already see you guys waiting on the show. Like, you gotta get your Tuesday night fix. Let me shout out Nicholas, who was the first person to comment from 6:39 p.m. You've been waiting, Nicholas. Says, love your content and the information you share. CZ from Binance made calculated moves against FTX, just watching how it all unfolds. Your daily, it says all of crypto is one big Ponzi scheme. Well, we'll discuss later. Joel says he's joining from Kingston. David says hi. Kish joining from London as usual. Coco is all the way in TCI, Turks and Caicos. Kish wants to know if this is the end of crypto. We'll discuss. Lavar tuning in from Mandeville. Robert all the way from New Jersey. Anthony says Portmore in the building. Orville checking in from Spanish Town as usual. And of course, we have Jermaine in Atlanta, Georgia. And then who else? Russell is in Trinidad and Tobago. A. Haynes is in Philly. And then Maurice says, big up Cal tuning in from St. Thomas. Do you know you went up a couple notches in my book when you revealed a couple weeks ago that you're a fan of the series Billions? I should have known. Let's get this money. Of course, show about money. Come on, I'm in. Well, we are talking about digital currency, specifically cryptocurrency, this evening as the second largest cryptocurrency exchange in the world, FTX, has filed for bankruptcy. And that has triggered a bloodbath in the crypto market, as you just saw in What's Hot. FTX is actually domiciled in the Bahamas. So this is a Caribbean story too. Very, very interesting. I did try to get one of the regulators from the Bahamas to join us today. We weren't able to make that happen for you, but we will have a very, very interesting discussion because there's so many questions that come out of the past week. What does this mean for major cryptocurrencies such as Bitcoin? What will happen to all of FTX's customers? And should crypto now be regulated? That is the big question. That's the looming, kind of like the elephant in the room. So my guest this evening is International Keynote Speaker on Bitcoin, blockchain, and finance technology, Armando Pantoja. Hi, Armando.
How you guys doing today?
Great. It's so nice to have you on. How is it are you in Tampa?
I'm in Tampa, Florida, yes.
Awesome. So before we get into, everything that's happened over the past week, tell us a little bit about yourself and your involvement with cryptocurrency.
Okay, so I've been in cryptocurrency since around 2011. So I've been in about 10 years now. I developed a cryptocurrency called Higher Match in 2016. 17, I exited out of another company called ICO Ranker, which was one of the top crypto websites in the world at the time. And since then, I've been just heavily involved in many crypto projects, educating people about crypto, and just heavily involved in the crypto scene.
So bottom line, you know a little bit about crypto.
Yeah, I've been in it for a while.
Maybe a bit more than a bit, quite a bit about crypto. All right, so set the scene for us. For those who've been living under a rock the past week and don't know what's going on, what happened in the past week?
Okay, so FTX, which was one of the biggest cryptocurrency exchanges in the world, just to give you an idea, it's roughly half of crypto that was traded in the world was traded on FTX. The volume on FTX was roughly half of all crypto, right? So it was a pretty big exchange, right? And that's where people either acquired their crypto, bought or sold crypto, right? Is on this exchange. So it was something that was completely unexpected. As little as like 3 weeks ago, people would have never thought that FTX would fail as bad as it did. So it was unexpected. That's why it's such big news, because the owner or the founder, Sam Bankman-Fried, was seen as like the white knight of the crypto industry, and he was going to bring some good to it, and he was going to make this new exchange. He was going to, take crypto to another level than it is today. And all of a sudden, the guy that was supposed to do, he was actually on the cover of Forbes, I believe, a year or two ago. He was the last person you would expect to be running maybe like a shady operation. That's the reason why it's such big news, and it affected crypto confidence and just the crypto market in general.
Right. So FTX has been, they have they had a very good, solid reputation. Their name was even on the Miami Heat arena.
Exactly.
They sponsored, all types of sporting events.
Tom Brady, Steph Curry, they sponsored a Formula One race, I think, in Europe. I mean, they spent a lot of money on advertising and promotion.
Right. So what happened?
So this is what happened, right? Now, I saw a user post and said Binance, it was a move against FTX, and I sort of believe that, but it really doesn't matter because the move shouldn't have been existed in the first place. But what really happened is that sometime last week, Binance lost confidence in FTX, supposedly. So they put out a tweet and said, look, they're going to sell off all the FTX tokens that they have, which caused a run on the market. It put fear into the market. People say, well, if Binance is selling, what did they know? Do they know that maybe there's something going wrong? Do they know that FTX is going down? So it caused a lot of users to withdraw their crypto. At the time, that's what caused what's called a liquidity crisis, because FTX didn't really have the money to give to all the people. Like, and it's not as crazy as it sounds, because, for example, with the local bank here, if everybody ran into the bank at once, the bank doesn't have the cash to give everybody that cash back.
Right.
So now there's an issue, right? But in crypto, it's an even deeper issue. So people assume maybe you don't have the crypto. So the crisis got worse and worse and worse. And then Binance stepped in and said, look, hey, we're going to solve your problem by buying your operation. And they did some due diligence. Then they said, well, it's even worse than we thought. We don't want to buy it. So that caused even more crisis, right? Because now FTX has no way out of this. So they started locking user funds, and a lot of other crazy details got unveiled. And now we're at the position we are now with crypto in a downtrend and FTX in the hot seat.
Right. So, but there are some questions about why Binance did what they did in the first place. So why did, oh gosh, what's the guy's name?
They call him CZ.
Yeah, CZ. Why he did that? Because I understand that he and Sam Bankman-Fried used to be friends. Sam Bankman-Fried used to work at Binance, right?
Yeah, exactly. So,
and then Binance had a large amount of holding in FTX's token.
Exactly.
Yeah. So it's a whole lot of drama in behind the scenes as well. Perhaps some personal drama too.
Yeah, I mean, a lot of people, including myself, think it was partially a chess move by CZ to remove his competition in one move, right? He saw the opportunity, I believe, and he took the opportunity, right? Because what businessman wouldn't do that, right? So it's not anything, morally wrong with that, I guess. But I think he saw an opportunity. He knew that FTX was probably going through some kind of liquidity or other crisis. He acted quickly, put out that tweet, started selling off his tokens to crash the market and put FTX on the defensive. They couldn't respond, and this is where we are today.
But in your video, Armando, you said it was, you said the evil reason behind the FTX crash. Well, what were you referring to? Evil?
And CZ probably knew internal details what was going on at FTX, which actually made his decision, more effective. So the reason why FTX was running into liquidity problems was because they have their own. FTX is an exchange, but they also have a token, which they use for like paying fees and exchanges certain cryptos on their own exchange, right? So, but the evil or the weird thing they did is that they used their own internal token, and they had FTX was or Sam Bankman's companies. He had two companies. He had FTX Exchange. He had another one called he had a capital arm, right? Alameda Capital, I believe it was.
Right.
And so he took loans. He took all the loans out through Alameda Capital, and then he used FTX as a different arm, right? So he would actually take the FTX token from the company and put it in the Alameda Research, I believe it's called. This is called the capital arm. And when he did that, he would use that FTX token to take out leverage loans for more crypto, like Ethereum, Bitcoin, or even cash, right? Then he would take those tokens and transfer them back to the first company. Now, that's really unethical, really. And it's two reasons for that. It's because now you're commingling funds, which is, I don't know how illegal it is in the Bahamas. In the United States, that's illegal, or it's not, 100%. The accountant doesn't really, it's not ethical accounting if it's not illegal. And secondly, is that he had almost a total ability to manipulate this currency on the first company. So he had an ability to, it was an infinite banking system. Is he could always transfer over tokens to this capital arm, take out loans against those tokens, and then transfer the tokens back, then keep doing it over and over and over again. He could take out an infinite amount of loans, right? But that put him in this liquidity crisis. Is because you can't have infinite money. Something's going to go wrong. Something's going to happen, right? And I guess CZ saw that opportunity and struck.
So as somebody who is familiar with, other cryptocurrencies and how they operate, is this generally how they operate, or was this an exception? Is FTX the only one that operates that way?
I've been in crypto for almost 10 years and I've never heard anything like this. But the thing about crypto is that it's so unregulated that there probably are more people doing things like this because it's almost like remember this, I just want to tell everybody this, is that we're very, 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 very early in the life of cryptocurrency, right? It took stocks maybe 100 years for stocks to be regulated and safe. For the first 100 years, stocks were crazy. People were printing up fake stock certificates. The crash in 29 in the United States was caused by massive fraud, massive manipulation, and massive corruption. That's the reason why it crashed one of the reasons why it crashed in 29. So this is what happens in maturing markets. There's going to be manipulation. There's going to be fraud, all these stuff, because we're in the wild, wild west part. Like in the United States, when the West was being conquered, their rules wasn't there yet. There was no regulation. Everybody's trying to find their way. These are people on the frontier. So they tend to try to make their own rules or tend to try to make their own way. And there's always going to be bad actors in a situation like that.
So you brought up a very important word, which is regulation. So a lot of people say that the benefit of cryptocurrency is that it's decentralized and that it's unregulated. But there's a lot of talk now about regulating cryptocurrency and the crash of FTX being used to justify why regulation is needed. What's your perspective on that? Should it be regulated?
Okay, so when I first got into cryptocurrency, 2011, I was a little younger, a little more naive, a little more, trusting of the world around me. I didn't believe in regulation at first. I thought that cryptocurrency should be free, should be decentralized, should be unregulated, right? I didn't even believe it should be taxed at that time. But as I've grown older, as I've seen the bad actors, at first there wasn't a lot of bad actors. Now there's so many people that know about crypto, and that brings in the criminal element. And there's so many things causing people to lose confidence in crypto. Every 2 or 3 years we hear something like this. I believe regulation would help at this point crypto go from where it's at now to like a Wild West type thing to being a real asset to what people can, transfer, people can buy stuff with. They can use it as an investment vehicle, and they can use it for, retirements or whatever they need to do. And regulation is needed, I believe, at this point. Now, I just don't think the average people, politicians, the average person in a middle-class person is ever going to accept crypto as a real asset until it's regulated by the governments.
So Blue, one of our viewers, says Bitcoin can never be regulated. What could regulation look like?
So this is the situation, right? Is that people say that, I want to reiterate, I believe in decentralization. I believe that in my heart of hearts, I wish there was a world where all of this could be unregulated and it could be a free currency that we all could use, and we all wouldn't have to have a third party like the government telling us what we shouldn't do or setting rules. But that's just not the way the real world works, right? And he's referring to you really can't, because Bitcoin is not controlled by anybody, right? There's no central party, so you can't control Bitcoin. But you can regulate anything. They regulate, plants outside. They regulate tobacco. I mean, anybody could go in their backyard and grow a patch of tobacco, but it's illegal to do so without a license. So that's how they regulate things. They just make the punishment so harsh or the fees so much that people just would rather not do it. So like I said, right now, if they came out and said, look, man, we're going to ban Bitcoin in a country, and if you get caught with it, you get 10 years. I mean, nobody's going to trade Bitcoin at that time. I don't care if you technically, you could trade it and never get caught, but most 90% of people will just let it go. That's the way the government steps in and takes control. But it's not going to be that extreme of Bitcoin. I think there'll be some slight regulation in the U.S. and some other countries, but I think a little bit is needed to get crypto to where it needs to be.
So what happens to FTX users now? Are they just don't have any, all the money's just gone?
It's not all gone, but they have to, now they're seen as a regular creditor in the bankruptcy proceedings, right? So so now they have to go through bankruptcy court to see what they can get back. They're seen as a regular creditor now. And Coinbase, actually, this is the thing, Coinbase 6 months ago filed some documents with the SEC, and they said that's how they would handle a bankruptcy also. If Coinbase ever went bankrupt, they said they would see the users as creditors, and then they would, and they could get the debt wiped out and they wouldn't owe them nothing. That's why it's important to keep your crypto on a third-party device.
All right, so explain that, because somebody just commented as well. Just get your money off the exchange and on cold
It's very, very dangerous.
And how do you do that?
It's very, very dangerous in this environment to keep your crypto on exchanges, because we don't know how any exchange, we didn't know, nobody knew that FTX, this would happen. Nobody knew this, right? So all of a sudden you wake up and this story is unfolding and it's too late. You can't get it off. So cold storage devices are devices. Some look like USB drives, some look like little computers, some are card based. One of my favorite ones is Arculus. That's ARCULUS. What they do is that you transfer the crypto from those exchanges, which is what they call a hot wallet, to the cold storage device. And now nobody can take it from you. Nobody can lock it up. You're the only one with access to it, and you're the only one that could transfer it off that device, right? So this is and it's a saying in crypto for a lot of the people that's been in for a while. They say it's not your crypto if you don't own the keys, and the keys are stored on that device. If you have it on an exchange, your keys are stored on the exchange. You don't even see it. Your keys are on the device. So if you transfer the crypto to your device, you have control of the crypto and the keys.
So it's basically like having cash in your pocket versus having cash in the bank.
It's like having cash in a safe in your house or cash in the bank. Now, if something goes down with that bank, they can seize the cash in the bank. They can't seize it out of your house without coming into your house. You don't even know if you have it in your house. So that's the difference.
Right, exactly. So Mr. Chemical says, if crypto becomes regulated, it would eliminate crypto because we'd end up back with the same old banking systems, low processing and high fees. So would regulation just basically make crypto obsolete?
I don't believe so, because you're thinking about heavy regulation. There's different levels of regulation, right? So a lot of things are regular. I mean, even the way the internet is slightly regulated, you can't do certain things on there. I just think there has to be a set of laws to where, just a framework of laws and what we can and can't do there, just to make people safer, right? Because I just don't believe that normal Americans, normal people in the world, normal Jamaicans, for example, will have trust in cryptocurrency unless there's some type of assurance that they won't get scammed. It's been every 2 or 3 years, there's a scam coming out. And every time I can see it in people's hearts and in their eyes, they lose a little bit of confidence, And some people are terrified to put their money into crypto right now. And I don't see that changing unless there's some type of regulation. Now, I don't want heavy regulation like the banks. I just want, I don't even want regulation really, but I just don't see another way.
Mm-hmm. So what are you observing now? You said that people are scared and rightfully so. Do you think that in the long term that this will damage the reputation of cryptocurrency and the confidence that people have in it?
I've heard the word Ponzi and crypto, and I've heard the word Ponzi in relation to crypto a lot in the last 2 weeks. And I'm just telling you, it's not a Ponzi scheme. It's not a scheme or a scam, because for example, somebody just put a quote up and they said, or a message, and they said Bitcoin can't be regulated. They were referring to the decentralization of Bitcoin. Is that who would benefit from Bitcoin being a scam? there's nobody at the top, So the person at the top, we don't know who it is because he maybe passed away or he's just disconnected from the grid somewhere. But we don't, who would, a scam has to have people who benefit from it. Nobody would benefit from a lot of cryptos being a scam. So it can't be a scam, right? Some cryptos could, but a lot of cryptos can't be scams because there's nobody to benefit from it.
I'm laughing at some other comments. Some people saying they wouldn't put $1 Jamaican in crypto, which is like,
that's what I'm saying,
10 cents US, if even that much.
Is people are terrified. And I just don't see a way for crypto to move forward without some type of light regulation.
Right. So your daily says regulation is a must for crypto. Without it, it will die. I see another comment I wanted to take, and this one comes from Lushandi. Says FTX filed a Chapter 11 protection, which means they need to work to pay off their debts. Do you think they'll be able to pay this debt off, or will the court turn that filing into a Chapter 7 bankruptcy?
I think it's going into a Chapter 7. I can't see them possibly being able to pay everybody back. I just don't see. It's a lot of money. I don't think they even have it. So I think when they look over the documents, look over their assets, they won't have enough to pay everybody back. It'll turn maybe, I think, into a Chapter 7.
And what is a Chapter 7 for those of us not familiar with U.S. law, bankruptcy law?
Chapter 11 is that you have to attempt to pay everybody back. Chapter 7 is all your debts are just wiped out. You just start over. You don't have any debts anymore. Roughly, I don't know the legal basis. That's the high level explanation of it.
Right. So, okay, so let's look at some of the basics of what happened. So FTT, which is FTX's native token, they lost how much in value in the space of that 24 hours that we were talking about?
94%, roughly.
Ouch.
Yeah, it's a lot. And actually, there's a value of it if you look it up, but a lot of analysts say it's worthless now. It's zero. So it lost all of its value, really. But you can still buy it, and maybe there's some valuation somewhere, but it probably is worth zero right now. There's no exchange. That token is hard connected to the exchange. The exchange doesn't exist anymore, so that token is useless. So the value is probably zero now. So it lost all of its value.
Basically. And it also had an impact on other major cryptocurrencies, including Bitcoin. Those all fell last week. I saw that they started rebounding a bit. But what do you think is going to happen there? Because since last year, Bitcoin was at almost 70,000 US to one Bitcoin. This year, it plummeted to 20,000, even before the whole FTX scandal. So what is the future in this industry?
So this is the surprising thing about crypto is how resilient it is, Bitcoin especially. And this is what I tell a lot of people is that I would have expected Bitcoin to take a deeper dive off of this. It's only down 20% from, it was at 20,000. Now it's at 16. That's 20%. That's not that much, for an entire exchange falling that was half the volume. Just to give you an example, back in 2013, there was an MT Gox. The MT Gox thing was one of the biggest things that happened in crypto. This has happened before. This is why a lot of people need to, step back and look at all the events that have ever happened in cryptocurrency history. 2013, there was only one exchange that existed in cryptocurrency. It was called MT Gox. So there was a hack in MT Gox. $50 million worth of Bitcoin got stolen, which sounds like not that much today, but it was a lot back then. Bitcoin was at $1,100 per coin. So that was the only exchange ever got hacked, right? Crypto went from $1,100 all the way down to $100. It lost 90% of its value in the following months after that. And a lot of people said crypto was over, it's done, it'll never come back. And look where we are today.
So where it was last year at almost 70,000, was that overvalued?
I think it should have actually been higher.
Yeah.
And the thing about a lot of predictions had Bitcoin at 100, 150, but during that, because Bitcoin has a 4-year cycle, the halving cycle, they call it, and all other cryptos move with Bitcoin, because Bitcoin is the main driver of a lot of crypto value. Bitcoin goes up, a lot of the cryptos go up along with it at different rates. So Bitcoin was going to go up in 2020 regardless, because there was a halving event in May of 2020, which the supply of Bitcoin gets cut in half, and there's always a bull run after that. It was going to happen anyway. But during that year, there was COVID. Then the next year, there was a war in Ukraine. There was COVID came back twice during those 2 years. So in the 18-month bull cycle, there was severe drops, right? So it caused a lot of that momentum to get, to get lost. Bitcoin should have actually been at like 150, but the momentum got cut short in that bull run because of the COVID and all these other things. So 70,000 was undervalued more than likely.
So I have two comments here that I want you to respond to. One comes from Martin, who says Bitcoin is like that man in the old Jamaican song, hard man for dead. And then Lanesra says there is no fundamental to why Bitcoin rises or falls. That's like gambling. How do you respond to that?
There's an exact fundamental is why Bitcoin rises or falls. It's that there's people say there's no fundamental way, but it's because they don't know or understand what the underlying meaning of Bitcoin is. Now, let me give you an example. Let's say there was a worldwide computer that stored data, that moved money around the world, and is made up of 1 million computers. How much value would that have? Now a company would pay a lot for that. If you said, well, we have a computer network all over the world in which you can put your systems on top of it, and you can send money, you can store data, you can move transactions around the world, and we can store it forever, and it's always going to be secure data. There's a value to that system, right? That's what Bitcoin is. That's the underlying value of the system itself. And it's hard for people to understand that because we're so used to stuff being backed by gold or dollars, but this is backed by computing power, which is one of the biggest computer networks in the world. And Bitcoin sits on top of it. That's what the blockchain technology is. That's where the value comes from, that and scarcity. There's only 21 million Bitcoin that can ever be created, and that's it. And every 4 years, the supply of Bitcoins that come to market gets cut in half. Those three things are the underlying fundamentals that create the value in Bitcoin. Now, it's a new idea. We're so used to things being backed by gold or companies, whatever. It's very difficult for a lot of people to understand that. But things change in life. Things are always changing. And you have to be open to new ideas. Everything's not going to be always backed by gold, dollars, companies. Those things change. And Bitcoin is one of the first examples of that. It's one of the first examples.
Really interesting. So here's the big question of the day. Is it still wise to buy cryptocurrency now?
So let's take an example. So if we, where's Bitcoin at? 16,000 right now today? All right, so let's go back 4 years to 2018. Bitcoin was at roughly $7,000, $8,000. So if you bought it in 2018, you're up 250%, right? So if you bought Bitcoin back in 2013, you may have got it for like $200. You're up how much? 120 times your money? 120, what is it? 12 times your money is, no, it's 120 times your money. So it's a lot, 12,000%, right? So anybody who's bought Bitcoin and held it for 4 years or greater has made incredible profits. But anybody that's buying and selling in short windows, those people lose. If you look at the chart, we'll see the Bitcoin chart. It's a trajectory is going up. Now there's small ups and downs during that upward trajectory, but the trajectory keeps going up. Every 4 years, we see new highs. We don't see new lows every 4 years. We see new highs. So that tells you that it's the trajectory is moving upwards.
So Blue is just making the point that this is not investment advice. Guys, do what is right for you. We always have to have that standard.
Exactly.
But, so are you saying that you think the market can recover even after this?
It'll take like every other drawdown. The drawdowns in Bitcoin were 2013, 2018, and 2022 that we're in today. So every drawdown, it was the same exact cycle. Bitcoin lost about 80% of its value. It recovered 18 months after that and reached new highs. Every single time. This is the third time I've been through this. And this is, and every time there was always a big event that caused it, which, MT Gox, and it was the falls of the ICOs in 18, and now it is. So every 4 years, there's been something that caused Bitcoin to fall. It took about 18 months for it to stabilize. Then it was another bull run for 18 months.
So finally, Armando, what can we all learn from this?
What we can learn from this is that this is what I tell a lot of my people in my, my groups or whatever, is that we can learn not to panic. because the panic, that's what caused the run on FTX. That's what one of the partial reasons it crashed, because a lot of people panicked at once. And to just look at things more holistically, right? Don't look at certain events and make your decisions off of that. Come back off of the chart and look at all the events that are happening and make your decisions more on long-term plays instead of short-term fear.
All right. Well, thank you so much for joining us and breaking it all down, guys. You can follow Armando on Instagram and TikTok at Tall Guy Tycoon. You also have a YouTube channel. What's your channel called?
Same tag as Tall Guy Tycoon. TallGuyTycoon.
Yeah, and guys, Armando has some great videos on this whole saga, summarizing what has happened. You did 2 videos?
I did 3. I think I just put another one up. Yeah.
And you can follow him for all things crypto. Thanks again, Armando.
Thank you.
All right. So those of you watching, it's time to take our poll question for this week. And of course, it is on crypto. You can head on over to the community section of the YouTube channel and also over on Twitter. How do you feel about cryptocurrency following the crash of FTX? So here are your options. Crypto was always risky, so no surprise. I lost a lot of money. It will rebound, or I'm out, never again. Or you can just leave a comment if you have a different perspective. Up next, we've got your market recap, and the analysts are standing by.
This segment of Taking Stock was brought to you by Bulwark Insurance Agency, Insurance Made Easy. Time now for your market recap. The JSE Combined Index lost 5,000 points last week. 122 stocks traded across the main and junior markets for the week ending Friday, November 11, 2022. 36 made gains, 67 lost value, and 19 stayed the same. 110 million shares changed hands on the Jamaican dollar market, valued at $565 million. Wigton Wind Farm was the week's most traded stock. It took up 14% of market volume, with people buying and selling 15 million shares in the company. The stock opened this week at 58 cents. Trans-Jamaican Highway was the second most traded stock, with people buying and selling 12 million shares in the company. It gained 2 cents to open this week at $1.45. And Everything Fresh rounded out last week's most traded, taking up 9% of market volume with 10 million shares trading. The stock lost 31 cents to open this week at $1.29. Everything Fresh was also last week's biggest loser, down 20%. Now let's see who had the biggest gains for the week. PBS USD was last week's top stock, up 45% to open the new week at $2 US. Apple 7.5% preference shares due 2024 was the week's second biggest gainer, up nearly 42% to open this week at $7.59. And rounding out our biggest gains, Sterling Investments is up 15% to open the new week at $2.89. On the losing side now, T-Tech was the week's second biggest loser after Everything Fresh. The stock was down 16% to open Monday at $2.75. And Margaritaville Turks fell 15%, closing the week at $16.22. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 10 points last week. Massey was the most traded stock. It opened this week at $4.40 TT. Cinema One was the market's biggest gainer, up almost 9% to open this week at $6.50 TT. And on the losing side, NCB fell 6% to open the week at $4.70 TT. In the U.S., the markets were all up last week. The Dow Jones gained 4%, while the S&P 500 gained almost 6%, and the Nasdaq gained almost 8%. Over at the pumps, gas prices rose by 25 cents last week, while regular diesel went up by $3.06 and ultra-low sulfur diesel went up by $3.46. In foreign exchange, it took an average $154.57 Jamaican to purchase $1 last Friday. That's 3 cents less than a week before. Meanwhile, it took an average $116.74 Jamaican to purchase $1 Canadian. 1 British pound cost on average $176.87 Jamaican. And you could buy €1 for $154.84 Jamaican on average. Finally, on the crypto markets, the FTX crash sent crypto prices tumbling last week. Bitcoin fell 17% last week, trading at $17,011 on Friday. And it was the same for Ethereum, which fell 18% last week. The cryptocurrency was trading at $1,284 on Friday. This segment of Taking Stock, The Analysts, is brought to you by JMMB Group, your best interest at heart. Disclaimer: this is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back, guys. It's time now for the analysts. But first, let me take some more of your comments, some more of your feedback from the last segment. So Chioma says, it's been a while, but tonight could not miss me. Elaine said, crypto is the new fool's gold, and they're laughing, crying. Blue said, I was on FTX, but caught the rumors and self-custody fast. What? I guess you sold, okay, before that hit you. So good for you, Blue, for catching that. Coconut says, don't put all your eggs in one basket. That's what I learned. Absolutely right. You got to have a diversified portfolio. And crypto, as you know, is one of the riskier asset classes. So you don't want to have your portfolio saturated with crypto. You want to have other asset classes in there as well. Garvin says, the real value, I think, that came out of the creation of crypto is the creation of digital currency and blockchain technology. And then we have Jamie saying blockchain is the foundational mechanism that allows Bitcoin and every cryptocurrency to run, study the technology, and learn about it because the future is already here. Mr. Chemical shouting out Armando, saying thanks for being here. Yeah, he definitely did a really great job. Thank you so much for coming on, Armando. Lucian says, let's get these crypto while it's cheap. Let's get this money. And then Garvin again saying, but I thought crypto was supposed to be a medium of exchange and not used as a store of value. People just hoarding and hoping for the best. It turns out that it's more being used as a store of value than a medium of exchange right now, especially Bitcoin. You don't really see people actually spending Bitcoin. They're more using it as a store of value, generally speaking, but there's so many different cryptocurrencies out there. Let's get into the analysts. Now we have a couple of things to discuss. I'm joined by investment research and sovereign risk analyst at JMMB Group, Leovani Dillon, and founder and CEO of Profit Jumpstarter, Keisha Bailey. Welcome back, Leo and Keisha.
Oh, good night. How are you doing, Kalilah?
I'm good. I'm very good. So I actually want to start with Keisha this week. Usually we start with the local topic and then go international. But because we were just talking about crypto, let's start on the international scene. And we're looking at stocks because U.S. stocks rose significantly last week, Friday.
Yeah.
Keisha is here to tell us why. Did it have anything to do with the crypto crash, like people moving their assets from crypto into stocks because of what happened?
No. So what happened? Inflation numbers came out in the US on Friday, and the October numbers were very good in terms of looking at what we in Jamaica would say point to point, just looking at annual inflation up to October. Very good, 7.7%. We're finally below 8%. So why we saw that massive pickup on Friday was finally what the Fed is doing in terms of raising interest rates, it may be finally working. So because of that, no, and the fact that at the same time, what we saw with that crypto sell-off, it contributed then to persons saying, you know what, let me go back in and let me start buying, because we know that risk assets like equities have been beaten up for most of 2022. So on Friday, where we're able to see some small sign that, some of the uncertainty that's been plaguing us is starting to subside. We see the inflation numbers come out. Plus, it's looking less gloomy in terms of the Russia-Ukraine war. And the midterm elections are bringing more certainty back within the US. So because of that, you had investors now starting to buy stocks on Friday. It continued a little bit into Monday. And then Monday prices fell down a bit, and then they were back up today again because we had another inflation print out, the PPI. That was out today. And as well, if the CPI was looking good, the PPI usually follows on top of that. That was looking fairly well. So we're seeing inflation start to abate. Because of that, risk assets are the beneficiaries of stocks. So persons are slowly getting back into the stock market. Your question maybe, is this going to last? I don't know. Maybe it's too early to say that because we still have economic challenges. Inflation, though, coming down, it's still high. Still a high number. It's on a downward trend, but 1 month is not a trend. So we still need to see other inflation prints come up before we can say, yes, what the Fed is doing is working. The Fed also has not changed their tone around what they will be doing with future rate hikes. They have not said, well, we're going to slow down or we're going to cut the hikes. Nothing like that is out. It's just early exuberance, which, of course, we can trade into that. But it's just early exuberance around this inflation number that pushed up the prices on Friday.
So the inflation numbers were key, but we also had the midterm elections in the US last week with the Democrats maintaining marginal control.
Yes.
Did that have any impact?
Well, it helps to bring more certainty to the US economy because everyone was wondering what's going to happen. Are the Republicans going to take over control or are the Democrats going to hold? We see now the results are behind us. And so we can kind of breathe to say, well, we know this will continue for the next how much ever years. And so with more certainty comes now persons and investors saying, let me put my money into more risky type investments, which are stocks. So they all kind of come together at the same time to kind of ease and create some opportunity for persons to slowly get back into the market. Not as much as we'd want, but of course we may see a short-term rally, a relief rally continuing on into the Christmas.
I've been seeing some reports that Trump is getting ready to announce a 2024 bid for the presidency again. What impact could that possibly have? Like, what impact have we seen with a Trump presidency and confidence in Republicans versus Democrats if that was to happen?
It would more be the Trump factor, right? And a lot of these tweets or any media outlets, they create noise, right? So a lot of people trade off noise. They take advantage of that. That can be a strategy you can use, to take advantage of panic that would create. But sometimes people just use these noise opportunities to get into really good investments. That's what I personally do. I trade noise for that particular reason. But we have to see it out in the news first. We have to see official. But you always can use the short-term noise and make some money from it.
So Lanesra says that with the Christmas season coming up, inflation could be on the rise with extra spending. Is that typically what we see around Christmas period?
Well, yes and no, because we have Black Friday deals going on. So with Black Friday, you have lower prices coming in, usually more demand, but at the same time, lower prices. What really will help is the impact of our consumers really supporting Black Friday. And so the Black Friday sales numbers will be very important when those are released. We'll be able to see, is the US consumer really coming back out to spend? Will it create inflation? Not likely, because we're going to be having sales. And based on where interest rates are now, they're still high. A lot of persons not looking to run up their credit cards for Christmas, nor should they. So I don't see the Christmas period creating a lot more around inflation. I more see it carrying on that trend. And so we may get another print, which looks fairly decent.
Okay. Well, good news is that inflation is trending down both in the US and here. So the US now around 7%. Jamaica, we're now around 9%, coming from 11% a couple months ago. So happy that it's trending down. We need it to go down even further. So Leo, let's bring you in here. How are you doing, Leo?
I'm good. How are you doing? I'm
you
good.
are taking a look at one of the largest, well, not one of, the largest financial institution in Jamaica this week, and that is NCB. And I want you to tell me, what their results are looking like, because that could be an indicator as well for the broader economy. If NCB is doing well, then hey, things not so bad, right?
Yeah, I mean, it could be, but I wouldn't really read it like that with these companies, NCB and the like. Because especially with NCB, regional footprint, Guardian being a big part of the company, it's kind of hard to get a read on it like that. But in general, you'd like to see bigger companies doing well, because that augurs well for the broader economy. But there's not necessarily that perfect correlation, though. So if I can share my screen a bit here, I can discuss through these numbers and
sure, go ahead.
Yeah, man. Hold on. Yeah, so if I can, okay, so let me just share it here. All right, so what we're seeing is NCB came out with some brilliant numbers. So what we're looking at is the 2022 numbers in particular, right? So they came up with some brilliant numbers when they compare it to the previous financial year, right? Now, the thing about that number is that if you look at it now on a broader spectrum, so if you go back a few years now, so like 2019, you can see that they're still below that number. So that's a critical point. But they're not far behind, right? Now, the primary reason for that driver of the growth in 2022 for them was the insurance segment. So the banking investments, there's a little growth there, but a lot of it really came from insurance. And of course, a big part of that is Guardian Holdings, right? Now, that's a good number. Now, here's where the results were a bit mixed. So when you look on the total assets of the bank, that was also up, over $2 trillion. But when you look on the equity of the bank here now, that fell off a bit. So that fell about 7%, right? When you're comparing it to financial year 2021. Now, that is, creating a little bit of mixed bag. But I just want to point out two things here. One, look at 2019 numbers. 29, almost 30 billion, and look on the equity, right? So it's still higher now than it was in 2019, marginally, but it's higher, right? That's going to be important a little later, but I was pointing that out from now, right? So that's what we're looking at on the financial side. Now, when you look on the company's stock price performance, it hasn't been good at all. So what we're seeing is that you're seeing them fall off, right? And we all know this. It's down 32% basically for the year, underperforming the market, right? So that's a very, close to 1 year performance. Now, when you zoom out a bit and you look at the performance of the stock again, we can see that it's way off the highs that we saw in about August 2019, right? We're around 200 plus, right? So we're way off that, right? But that's what we're looking at now, right? Now, again, we're still up significantly from lower levels, meaning, you're going back 2017 or so, we're still up from those levels, 2015 levels, but we're just significantly off the highs on the company. No, but remember that point that I'd shown earlier. The stock in 2019, the profit of the company and the equity, it's higher now. Well, the profit is a little bit off, but the equity is higher now than it was then, but the stock price is way off. So in 2019, we had about $30 billion in profit. Now we're about 27, but the stock price is nowhere close to where it was at that time, right? Now, when you zoom out again, now when you look at the performance in another way, you can see there that NCB has done well from 2015 to 2019, but in recent times, 2020, 2021, 2022, not at all. But again, you saw a similar pattern, not the same, because this is 3 years now of loss. Well, technically the year is not up, but we can safely say that, it's going to have a long way to pull if it's going to be positive for the year, right? Now, when you look on these 2 years though, 2012, 2013, the stock was down and then it started, never really did much in 2015, but you see some big performance here. Now, the reason why I'm showing this is to give investors a broader view. So when you look on the year-to-date numbers, people are going to be shy and say, no, I don't want NCB. If you look, back a few years ago and say, no, I don't want it. But if you look on the bigger scale, meaning, you look back at 2015 when NCB was around $18, $17, it's still up big from that. If you look out and you see it on this chart, is that you will see where the stock, yes, it has its bad years, but then it can also have some very good years. So that's the reason why, in general, when we're making recommendations, we tell investors to look long term. Because if you look on a shorter term horizon, yes, in a 1 year period, as you see here, the stock can be up 116%, but those are not guaranteed returns. So that's why we say look on a longer term basis, because that way increases the chances or probability that you'll have a favorable outcome, right? So that's what we're looking at here. Now, finally, when you look on the value traded in the stock, you can see that the interest is waning. So you go back a few years, you can see people trading like on average $80 million a day. Granted, there's a lot of big trades in this in terms of like some multi-billion-dollar trades that would occur. But when you look in 2022, you're not seeing that level of activity. It's the worst going all the way back to 2017 in terms of the value that's traded on a given day, right? So we're under 20 million, running around 15 or so million on an average day. And you go back 2021 or so, you're seeing a lot more, like 40 million, over 10 million. Sorry,
Why
100
is that,
now.
you think, Leo? You think NCB shareholders are just holding close to their chest? They don't want to sell right now because the price is so low?
Yeah, it's a combination. So that would be a part of it, and also persons not that interested. Because if you look in the broader market, and you see it when you look on, for example, the Jamaica Stock Exchange earnings report, you'll see the cess income fall off. That's a function of less trading activity. So when stock prices get depressed like this, there's a combination of factors. You have persons that have it and are not selling because they're holding it long term and they're not selling and realizing any significant losses. But also you have on the flip side that persons not really interested in the market. Like the interest kind of wanes. Because remember, especially if you look on a lot of new investors in the market, especially investors that came into the market like 2015, 2016, they're only seeing upside. And in those people, in that period, you could throw a stone and your portfolio would probably up 50% because almost everything was running. So what happened is that if you're in the market, new to the market, and you came in during that period, you only know gains, and then it's harder for you to appreciate how the market works on a longer scale, how it works in terms of, it's not always going to be up 50% and 60% in a year. There's going to be drawdowns, and that's how it works, right? So it's just normal market activity. And again, if you look on the performance, and these charts bear that out, when you look on the PE valuation, especially the price to book, let's fast forward to this one. At the highs, when NCB was printing around the 200, over 200, the price to book ratio was close to 4 times. Now it's at about 1.3, 1.4 times. So that means if you're looking at it on a valuation perspective, the stock is as cheap as it's been in years. But the interest isn't there. You realize a lot of the interest was in when the stock was basically at the most expensive.
Mm-hmm.
When 4 times, but now that it's down, the interest. So it's kind of an opposite of how you would think if you're acting on a purely logical.
It's a psychological impact, Leo. The more expensive something is, the more valuable people think it is.
That is
when it was at 70, everybody wanted to jump in on Bitcoin. And now that it's low, people don't want to buy it.
People don't want to buy it. But you see that, all right, so with crypto,
people were buying at 200, but now that it's 84, they don't want it.
No, they don't want it. But remember, when it was at 200, the profit was similar. A little bit more, but similar to what it is now. So that's again a show that there's just an overall, and it's not just NCB. You can look across the broader market in the financial space. There is a contraction in sentiment. So yes, we do understand that, especially in the near term, interest rates going up. Persons might saying, all right, there might be a little recession in the works here. We'll get all of that. But if you look on it on a broader scale, the sentiment, I think, is just overly negative, meaning that person just losing interest because they're not getting those big gains anymore. That being said, though, that's why I'm saying for investors, you have to have a longer term scale. Now, what you're looking at. So, for example, as you brought up earlier on the show, you see that NCB link subsidiary has got approval now to enter into go into the remittance market.
Big news.
Right? Big news, right? You're seeing that Guardian investment that they made is paying off big dividends in the recent numbers. And you have to ask yourself, all right, is the management, is the team, is this company able to continue to grow? Okay, that's one. Now, each investor can talk to their advisor and get that thing, but ask yourself these questions. Is it going to grow? All right. Yes or no, right? And you go through, what are those numbers going to look like? Does the value make sense? Meaning the price at which I'm buying. Now, again, looking at historical information can serve as a guide. It's not perfect, but it serves as a guide as to answer and valuation issues. Now, when you look on it from that perspective, it gives you a better view of what you can do in the long run. Now, again, if you look at any of these charts, PE, price to book or whatever, it's not a very good timing mechanism in terms of telling you, all right, buy the stock today because it's going to run next week. It's not good at that. But what it's good at doing is giving you a broader perspective of value. So that is how, as investors in a long term, you can get that view of what am I buying and does it make sense in terms of the valuation. So it's all good and well. When the stock was, so I was, of course, in the market when NCB was going up 200 plus, and the sentiment was at a fever pitch. And part of the reason why I felt that way was because of this same chart, in terms of looking at the price to book and seeing 4+ times, and then being in the market and seeing when the NCB was trading at half book. So that means, you look on the net asset value at NCB, and it, for example, it's $36 a share, and it was trading at half that, right? So I was in the market at that time, seeing, and then of course see the split when person buying at 4 times. Now when it was at half book, the sentiment around NCB was not that hot. Meaning that when it was like 18, so nobody never really that interested. It wasn't that hot. When it went to 200, it was the hottest thing on the street. And you see it in the volume, and you see it in terms of the volume of trading activity, and you could see it in sentiment, in terms of this anecdotally social media, whatever. Mm-hmm. But it's kind of contrary. So that's where I think investors can get the value. Talk to your advisor, find out your risk appetite. Because clearly, if you have, a short-term investment horizon, then you might not necessarily be interested here. But if you have a longer-term investment horizon, that's why you need to have that conversation and figure out what.
Did you see this article that was published by R Today last week? So the article is saying, if NCB is the largest bank in Jamaica, why doesn't it pay its shareholders regular dividends? Did you see this?
No, I didn't see that exact article.
So but I'm familiar with it. Let me just read the first few lines. There's a scathing article. It says, NCB shareholders, I hope Michael Leachin wants to purchase a new toy, some other assets or something for that matter this year, because it's only then that shareholders might get a dividend when it suits him. Many old poor pensioners are suffering because he and his handpicked board have refused to pay a dividend for about 3 years. And this has been getting a lot of response. But before we proceed, I want to point out that so many people, and I see Elaine was also commenting on it as well. Elaine saying NCB not paying a dividend is hurting the stock price. Other companies following them as well. If they pay out a dividend, the stock will run to $100. First of all, there is a big inaccuracy in that article. It's actually not true that they haven't paid a dividend for about 3 years. NCB did pay a dividend last year, 2021. And let me just show you right here. It's right here on the stock exchange website. They declared a dividend April 2021, paid out on May 31, 2021. And that was an interim dividend of 50 cents per ordinary stock unit. But a lot of people have been reacting and commenting on that article. I just wanted to get your perspective on NCB and their dividend policy.
All right, so here it is. All right, so yes, they haven't paid for a while. However, the rationale for not doing so, and you're seeing some companies following suit in the financial space probably as well. But the rationale for not doing so, I think, is good. So again, to the point that I made earlier, when you look on their equity in the end of financial year 2021, right, you can see that there was a 7% decline. A big reason for that is that even though the profits up big, when banks are recording assets, right, there's a big chunk of their on their balance sheet that's fair value through other comprehensive income, right? That's how they record some of the assets. These are like assets that they hold for longer term, like bonds and so, right? If there's a decline in global asset price, like bond prices or whatever, because especially in this environment, rising rates, people might be a little bit more risk off. What can happen is that you can have a big drawdown in that. That's actually the reason why the equity of the bank actually declined, despite the fact that they didn't pay a dividend and earnings were up big, right? So that's why you actually saw a decline. It's really because of the change in the value of those assets. Now, if you are of the view that there's a chance of a recession or, so it's a temporary blip, even if it's for a year or two, right, in the coming year, it would be prudent for them to hold on to capital because, again, remember, and that's the reason why it's like a balancing act. What you don't want to do is pay out some significant dividends now. There's a liquidity issue in the near term, and then you have a problem. Because remember, this is financial institutions. Now, to a point that you had made earlier, that was made earlier in the previous discussion about the run on bank with the exchange, right, the crypto exchange. With the financial system, one of the things that keeps it together is confidence in the system. Now, if one of the largest, as the bank, the article point out, and it is the largest bank in Jamaica, right, has issues, even if Other banks around it not having those kind of issues, just the idea that might be a problem creates the problem. So with the financial services sector, the banks, the big banks, I think it's very prudent for them to hold on to the capital. So granted, they could easily pay the dividend and things go up not so good and they're fine. But I would prefer, and I think a lot of persons in hindsight would prefer, if you hold on to the capital and next to guarantee that that doesn't happen, than to pay it out and then run, even if it's a small chance, you increase that chance of it happening. Because if it happens, it would be a significant issue, because it wouldn't be like, some exchange that maybe a few persons invested in it. It would be basically almost every person or a lot of society that's banked, which would be a lot of Jamaican society that's impacted in some way by this. So to me, I think it's prudent for them to do it. I don't blame them for it. And remember, what you have to ask yourself again, in the long haul, is it that they're never going to pay dividends again? No. So in the near term, yes, there's going to be some pain. Yes, there's going to be some issues. But I think what you don't want to do, pay it out now and then have a bigger issue in the future. So I think it's fine. And I mean, to be fair, all right, so dividends are important, yes. But with stocks in the long haul, a lot of the returns really come from capital appreciation. So yes, dividends is good and well. Some persons really, especially like, older investors, that more relying on the capital income. Yes, I get it, but we have to look on the long term. So remember, for example, this is just a final point. What had happened when there were some issues with the COVID and the BOJ had recommended that they don't make these payments, dividend payments out.
Right, I remember that.
It was just a precautionary move. It's not that if they did it, the whole system would crumble. It's a precautionary move, because what you don't want in Jamaica, because Jamaica is not the US, you don't want a situation where this thing go out of hand like a 2008 crisis occurred in Jamaica. So what you want to be extra prudent, cautious, and make sure that we're on the same page. So yeah, you could argue that boy them being too cautious, but I would say in the long haul, that's better. Be too cautious and short the system.
Well, I'd love to hear Keisha's perspective on the dividend issues. The Chipmunk says blue chip companies should be paying dividends, not buying. Well, he's not buying any company that old that's not paying me. How long is long term? Nothing is promised. So pay people dividends, pay me to hold. What do you think, Keisha?
Well, so when we think of ourselves as investors, there are two ways that we get a return. One being dividends, the other being capital appreciation. So if we're not getting dividends, we look then to capital appreciation. And the capital appreciation in the price comes from future profit growth, because the profit is what moves the share price in the long run. So it is fine if NCB is not paying a dividend. What we're looking for is future growth in profitability, so that we can get the return then on the share appreciation. So dividend yield, which would be how much is paid out versus the price of the stock. When we look at it, it's never been a substantial number. The driver of growth for investors has been appreciation in the price. Yes, the dividends are great. Yes, the money good. Yes, the passive income is good, but it will not make you wealthy. What brings the wealth is the capital appreciation. So that's what I'd say we need to focus on. Are we getting strong numbers from NCB? What does the future look like from NCB? And Leon spoke to that and spoke about their valuation, because that's really what's going to create wealth, not the dividends, because you get the dividends now. It means that the company is paying out future returns today.
Right, but you do have, especially,
it's actually very good.
Let me take this point from the R Today article, right? And the writer did acknowledge that, yes, they did pay an interim dividend of 50 cents later on, but the way how it started, it didn't seem like they were acknowledging that. But anyway, apparently this writer is a pensioner. So he's saying that I'm the victim of this no dividend policy. And I know many more pensioners whose pension funds claim they cannot give an increase because their funds are heavily invested in NCB shares and absolutely no dividend is being paid. So is it unfair to this particular group of people?
Well, so it's hitting on several issues. As an ex-pension fund manager, I don't know about making a claim like that to pensioners. So it's something that statement alone is something that needs more data and more research. I don't see pension funds say we can't pay because NCB didn't pay us. That's just not how asset management works for pension funds. So I'm a bit curious about that sentence and how that arose. But generally, when we think about pension, we think about retirement. The pension fund, being a member there and getting that monthly pension should be one of the income streams. This is where retirement planning is important, right? I understand that, yes, the pension payouts may be impacted from dividends, but still the pension fund managers would be doing other investments. NCB would not be the only investment within the pension plan portfolio, right? So still it's on us, we think, from now, earlier on. This is a good article, a good case study on things that we need to think about from now for our own retirement. What can we do such that if we are invested in a pension plan, we still have additional income streams, we have additional sources coming in retirement?
Very, very interesting. Thanks so much for your input, Keisha. Thank you for joining us, Leo.
Yeah. All right. Sorry, I just want to make one point.
Sure, go ahead.
Carib cement. I think that's another good point. Carib cement was below $1 sometime ago, 2015, 2016. I don't remember the exact year. But of course, we know recently it went all the way up to 140 before they start paying dividends. That return was tremendous, and that had nothing to do with dividends. So now they start paying a little dividend. But if you look at the wealth that could have been created, so if you had bought $1 million worth a few years back, it would be very, very good. Well, up to that, because now it's dropped off to about 50. And you could argue that part of that is because of the, the royalty payments and sentiment change, but that has nothing to do with dividends, right? So the point is, you can see a lot of appreciation from that. And one more point, with the pensioners, as you age, in general, as you age, your portfolio should shift less from equities, even blue chip stocks, and more into coupon paying stable bonds. So that would alleviate this kind of risk for those kind of investors. So of course, younger investors, you don't get dividends for 3 years, it don't matter. But I mean, for older investors, that should matter, but your exposure to equity should not be that drastic that you're feeling the pain like that.
Yeah.
So that's it. Mm-hmm.
All right. Thank you again, Alicia. Thank you, Keisha. Wait, what did I say, Alicia? That's your new couple name.
Yeah, right, Alicia.
Yeah.
Leo and Keisha. Thank you, guys. We'll take a quick break and be back with our wrap.
Yeah. All right.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
Hey, moneymakers, you're not an official part of the family until you have your merch. Visit KalilahReynolds.com/store to order your t-shirt and your mask today. Let's get this money. Let's get this money. So next week is going to be the launch of the brand new Money Mission Masterclass starring me, of course, and Keisha actually has a special module in that class. Join me live right here on YouTube. The launch is going to be on Wednesday, and there's a lot of things going on. So for those of you who've been interested in the Investing for Beginners Masterclass, this is the last week that version of the class will be available. Next week, when we launch Money Mission, that's going to be the new class, and it's going to be at a new price. But if you purchase Investing for Beginners this week, you're going to be able to access all the new modules, including Keisha's module, at the same price, right? At the existing price, because the price is going up next week. Right now, we also have a discount going on that is valid until November 20th. And you can use the coupon code Young Money for 20% off until November 20th. Young Money is your coupon code on the Investing for Beginners Masterclass. And like I said, if you purchase this week, you will get all the additional modules at no additional cost next week and beyond. So it's the last week. This is the last week for you to get the course at this particular price. You can get it for yourself, get it for a friend, get it for a family member. Our new modules include managing debt, budgeting. Keisha is going to tell us how to find great companies to invest in. I'm going to give you a tutorial on using JTrader Pro. I have a 3-part series on understanding financial statements. So we're going through how to read a balance sheet, how to read your cash flow statement, how to read the profit and loss statement. It is a lot of information, and that's why the price is going up. But like I said, if you buy this week, especially using the code Young Money, you get to access all that new stuff at the existing price. So don't miss this sale for this next week. Now, let me take some more of your comments before we wrap. Ryan Wallace says, yeah, the feds are predicting a recession that may affect Jamaica. So NCB is watching it, especially with the increase in the interest rate. See, the turnover development has withdrawn their development. That is another thing that we may need to talk about one of these days. Nigel Phillip was saying, okay, he gets the point, but NCB could have still pay a smaller dividend. Roswell says, let's see for how long the stock will plunge so that she can buy more. And then Elaine chiming in, what about JMMB? Look at the stock price. Where is the promised share buyback? Lushand said, in this time with inflation and US recession and things are unsure, it's best to hold that money now. Long-term holders win. That's the same point that Leo was making. And then Ryan agreeing, saying the long run is better. It's okay to hold dividend payments until your risk is reduced. Arita did a similar situation before paying out dividends, showing the risk factor in a letter to shareholders. All right, that is our show for this week. Let me thank you for watching and make sure that you like the video, guys. If you haven't liked the video just yet, just hit the like button for me, please. Subscribe to the channel if you haven't done that just yet as well. And share the video with a friend. Let somebody else know what's going on. We had a great conversation today about crypto, the future of crypto, what happened with FTX. And you're going to get a summary in our newsletter tomorrow morning. That's KalilahReynolds.com/newsletter. That's where you subscribe. And reminding you that all new email subscribers get a free copy of my broker guide. Make sure you turn on those post notifications so you can be the first to see everything when it drops. We want to help people learn more about money so we can all get this money together. Oh, I also have a series, a limited series premiering on Thursday with JN. It's called JN Talking Wealth. It's going to be premiering on my YouTube channel on Thursday. And every Thursday after that for the next 4 weeks. You get 4 episodes of JN Talking Wealth. Our first episode is going to be about good debt versus bad debt. And my guest is Petal James from JN. So that's definitely want to look out for that. A lot of things coming up next week. Wednesday, we're launching Money Mission Masterclass. In December, we have a few things coming up as well. We're going to have a Christmas giveaway special on December 15. You can contact business@KalilahRayMedia.com to find out how you can be a part of our Christmas giveaway special. And if you have any item to promote, if you have something that you're doing for the holiday season, you small business owner, Jamaican craft vendor, contact us so that you can be featured on our Christmas giveaway special. I'm going to find a better name for it, but we'll be doing a lot of giveaways during that program. So follow me all over social media on Instagram, Twitter, and TikTok at Kalilah Ray, and follow at KRM Business News on Instagram, reminding you that these are my only channels, my only platforms. If you see any other name, Kalilah Ray 2, Kalilah Ray _, it is not me. It is a scam. And I'm not going to be trying to entice you to invest in crypto, especially after the discussion that you just heard. I do not DM people asking them to join my Telegram or get on my WhatsApp. I don't do that, guys. So just know that it's a scam. You don't have to send me all the screenshots asking if this is really me. Just know that it is not. If you want to connect with the analysts this week, check the description box below for their contact information, and also visit the website KalilahReynolds.com for financial information you can use however you like it. You can watch, you can listen to the podcast, or you can read the articles. Now tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalilah Reynolds. See you later.
Let's get this money.